What is an insurance premium? I'm going to try to explain this as far as a consumer more than an agent trying to understand this. Hopefully, if you're an agent, you really understand this. If you're new to the industry, this will help you as well. So insurance premium is the fancy way of just saying your cost. It's what you're paying for a policy. There's 4 different categories that you're paying for on an insurance policy. The first one is the coverage limits. That's the limits that you've set, because an insurance won't just openly say, we'll cover any and every situation you have. Come give us your money, we'll pay a claim, because they're just opening themselves up to losing. They do something what's called the law of large numbers, where they insure thousands or hundreds of thousands, if not millions of people, and they understand that the cost for certain limits are what they're going to make their money on. And if they can make 10 or 20% on that money, they're winning. If you really look at the loss ratio, that's where they look at how much did they take in business and how much did they pay out, how much did they lose. They really want to make a 3 to 5% or more, right? There's some companies that make 20% and they're doing great. They've paid all their claims, they make some money, the CEO gets paid, all the agents get paid, and then there's some vacations at the end of the year. That's where insurance companies get the name of being greedy, because if they make too much, now it's just like, okay, you're just ripping us off. But what that does is that limit allows them to, one, make their profit, whether it's 3% or 20. And then it also makes sure that if you're going to go above that limit, you pay an additional premium. So you're paying that additional cost for the limits that you choose. Now, part of that is the second piece, which is your deductible. That deductible plays a factor in the premium, because the deductible offsets those limits. It's essentially you saying, I'm paying some of this bill, so lower my cost. When they pay a limit, let's say it's $100,000 and you have a $1,000 deductible, and that means you're going to pay $1,000. They understand that most claims are under that $1,000. So they're like, oh, they're not going to have us pay anything 90% of the time or 50% of the time, whatever their numbers are. And we don't have to pay that. So if we make it $1,000 deductible, they're willing to pay. That means 30, 40, whatever percentage don't actually pay or claim anything, then we get an additional income for the company. That deductible is going to offset what you're paying on a month-to-month basis. That's why most people say 500 or 1,000 deductible. That's like the common numbers. When they do that, they're lowering the cost by raising the part that I'm going to pay out as a customer. In turn, that lowers the cost of your premium. If you haven't figured it out yet, this is all about risk and reward. What are we paying to what is the risk of us being insured? When you're shopping for insurance, that's why we make up what's a profile. What's your age, what's your driving history, what are your claims, all the things, what's your credit, like all of the pieces that make up that profile. There's about 20 different pieces or more that each company likes or doesn't like. That's why having an independent agent can be helpful. If you are shopping for insurance, I'll put a link in the description below where you can work with the local independent agent. That leads to the next piece, which is the past claims. We kind of just mentioned it briefly, but the past claims that you've had makes a big difference. If you haven't had any claims, you're good. Now make sure that you haven't had any claims filed against you, because that insurance company will pull that data and they can just tell you right over the phone. They can send you an email. Usually it comes in the policy, so whatever your premium that you pay is will show any claims that affect that premium. If you've had an accident, risk and reward, that raises the risk because there's a good chance that you may have a second one. They know, because they use that law of large numbers, that if you've had a ticket, everyone else in this whole system that has had a ticket has had another one or has had an accident, or there's a 20% chance of you having an accident more than the person that doesn't have a ticket. They're essentially just playing the numbers game to figure out what is the premium that we should take for this product, the insurance, to give to you. And based on what your profile is what's going to determine part of that premium. The fourth one, there's a handful of people that don't love this because it is credit. Credit plays a very large factor, and it's not what it sounds like, because credit, you just think of what's my credit score. Yes, that is probably, I'd say 85% of what's going to affect this number, but they call it an insurance score. That insurance score includes the past history, any tickets, your credit, the odds of you missing payments, right? If you've had missed payments, they're not actually running a new credit check on you. They just pull the previous data. And if you've had bad credit, that means there's a higher risk for them not getting paid, having false claims, all of the things that they've determined based on credit basis. And because credit is such a big playing field, it makes a very large difference on the price. That premium, or price as we called, is going to be affected by your insurance score, which is really made up of a few things plus credit. At this point, you kind of understand the majority, right? Age is going to play a factor, your location is going to play a factor. All of these things create this premium or this cost of a policy. There's two videos that are going to be very helpful that will get you past this. One is understand exactly what that insurance score does, because that's going to play the biggest factor. I'm going to link our credit video or insurance score video here. Otherwise, this would be a great video for you to check out as well. I'm Mark with Think Insurance. I'll see you in the next one.